Good morning, everyone. This is Srikanth Rajan, and welcome back to the Wealth Management Podcast from MPIinvest.com. So, talking about the markets, well, at this point of time, I've been getting a lot of questions from people. Indian stock market is at its peak, so should I start investing now? One very important thing that we need to understand. Uh, like I've always been telling, no stock market in the world can ever be predicted for a shorter term. So, shorter term, it could be 1 hour, 1 minute, 1 day, 1 week. It is going to be difficult. But then, over a period of longer time, that could be 5, 10 years, it is very easy to predict how the markets can behave. So, at this point of time, when the Indian stock market is close to all time high, people who come and ask me whether it is good time to invest because the markets are already high, I only say one thing: do you know where is the next high? Nobody knows. So same thing. It's a not a single person in the world knows about where the stock market is going to bottom out or when it is going to go up. So what will happen in the stock market, and why Indian market is looking more attractive? That is something that we'll understand. But before that, talking about yesterday being an expiry, the markets which where when Indian markets which was kind of weak after the global weak sentiments kind of took a break and fell for a few days, but then yesterday it's again trying to recover. So it's very important to see how the market performs in the next upcoming week. When one thing I is for sure, this month is going to be a little positive because the result season is coming, and I mean it started already. So January we see the previous quarter results coming, so that is something which can be actually something that can kind of push the market at this point of time. So no surprises if the market hits 22,000 at this point of time. So it's very important to understand that Indian market is definitely overvalued by a lot of perspectives across the media. But as per me, since nobody knows whether this is the top or will consolidate and then rise, it is best to stay invested with your existing investment as long as your requirement for fund is little later. Maybe I'm telling you about still 2 3 years ahead, then you can just leave it as it is. But those who are looking for a requirement of fund in next 1 year probably can pull out fund at this point of time, because we never know from where here there can be a rise or a fall. But then, if at all there is a fall, then your fund can be stuck and your goal, financial goal for which you invested, would be in trouble. So it is very important that understand your financial goal, and based on that keep your investment. Now people who want to invest into the market, I would say just go ahead and start it, because last week when the market was at its peak, people asked me, should we invest when it was at 21,600? Then next day it went to 21,800. Now, what is happening at this point of time? Now there are multiple things that we need to look at. First thing, India's income tax collection is at record highs. What does it mean? More people with more income are coming out in India. Second thing, GST collections are at an all-time high and hitting records every month. So what does that mean? The companies in India are doing good. Third thing, interest rates at this point of time are very high. So that means interest rate cuts will start at least, if not March, at least sometime in mid of year or later. I forget it. Whenever it start, let it start, but it will happen, right? So rate cuts are definitely going to happen. So we really don't have to worry. But these are three factors which can drive the market for at least 1 to 2 years for now. So when the rate cuts are happening, naturally people will get interested. I mean, low interest loans. Naturally, people will start buying more cars, more homes, and more anything else. And naturally, the business and economy will grow further. Now, along with that, the very important thing is when GST is collection is going higher, that simply means the companies are doing well. They will also expand. Look at the kind of IPOs that's coming in India at this point of time. Every week we have one or two IPOs coming up. So what is that showing? It's nothing but the economy is growing. So at this point of time, even though India may look overvalued from multiple perspectives, I am telling you, next 1 or 2 years is looking great for India. Now, things like something like Corona comes up, nobody can do anything about it. Nobody knows when it comes. But then, of course, something new, I mean, of course, for Corona, it won't react again. But if something like Corona, again, something new crops up, those are things that can actually, like a Russia war happen. So these are unexpected things. So market always reacts faster to unexpected things. Whereas things which are expected, the market already discounts it in advance. So at this point of time, I would say the market is actually poised for some more rally, and that could happen maybe 1 month, maybe 6 months, maybe 1 year or 2 years, but then it is going to happen for sure. And I am looking at a longer term perspective because as an investor, that is what we need to look at. And looking at a longer term perspective, we don't have to worry about all these small, news coming around at this point of time. Because if that is keeping you worried, you will just keep worrying. In markets, it is a common thing that your portfolio goes down by 20, 30% or 40, 50% also if it is small and mid cap, and still recovers to more than 150%. So that's a common thing. So it is an overall returns over a period of time that we always see. So if you look at any 10-year point of view from the Indian stock market, it has not given, it has always given better returns than FD. So FD is never an investment portfolio because see how long can you do FD? Maximum 5 years. I think some banks offer 7 years, but not more than that. So why would you put your money in FD? First thing is that. Second thing, your FD returns are such low nowadays that it doesn't even beat the inflation. Third thing, FDs are something which is a short-term investment, asset. It is not for a longer term. So FDs have a shorter period. So if at this point of time, interest rates in FD are very high. So if you want a short-term goal, if you want to invest for like 2 years, 3 years, I would say go ahead and do it now because after some time, interest rates are going to come down for sure. Take my word for it. And for 2 3 years, you cannot invest into stock market because you never know because of the volatility where your money will go. But then it is best to go for FD. That can be done. Or even better option today we have many P2P investments like liquid loan that we are part of. So you can connect with us. We can help you get up to 10% returns on the investment. Fixed return I'm talking about. There are even AIFs by reliable companies in India, which is giving about 14% returns. Isn't that great? So these are things which is available at this market at this point of time. So at this point of time, when the interest rates are high, it is good for your investment going into some fixed investments, a small diversification. But then remember, lock-in is something that you need to be worried about. So don't go for something which is locking in your money for a long time. Imagine market corrects in next 2 years somewhere, Indian stock market corrects, and you want money to invest into it, but your FD is locked, hard locked. You can't even take the money out. Then what is the point? So if you are a stock market investor, I would not suggest the investment of your money into FD for a short term. Instead, I would say suggest many other options which we have. A combination of a debt fund, debt mutual fund, and a liquid loan can give amazing returns of upwards of 7 to 8%. And the best part is it is liquid also. So these are all things that can be considered at this point of time, right? And next most important thing is stay invested and sensibly invest. So it is a proportion of investment that makes a difference. It's something like your diet. When you eat food, you can eat healthy or unhealthy food, but if you eat in the right proportion, you will still stay healthy. But then if you don't have the proportion, if your proportion of bad or unhealthy food is high, naturally your body will not take it. So your investments are similar. So having a right diversification and also switching the diversifications based on the market conditions is something very important to grow your wealth, and that is exactly what MPI Invest helps you with. So schedule your meeting with us, and I am sure you will understand your point of view about your money and investing. And if you like to invest through us, you can do it. Otherwise, go ahead, do it yourself. So nothing wrong in having a meeting with us, right? So that's something which I would suggest. So do schedule a meeting with us at mpiinvest.com, or you can just contact our team on this WhatsApp number given here, and our team will help you, to join our community. So talking about markets today being a Friday, weekend is coming up, so markets will see some turbulence. That's only for traders. As of me, I had a decent trading return for this week. I traded for just 2 days and made some decent returns. And not taking any trade for this weekend, looking at how the markets can perform. Yesterday, US markets have continued to fall. The bond yields kind of went up slightly. That's completely irrational at this point of time. It's only the short term traders who are putting all these movements in the market. National tech stocks have actually fallen in the US. So that can be seen in Indian market. But Indian market tech stocks have already fallen so much earlier that I don't see much fall coming to Indian markets at this point of time. So I am expecting the markets to be kind of sideways to positive today. And coming to next week, let us discuss about all that in the Market Pulse video on Sunday. By the way, the Sunday being the first Sunday of this month, we will also be having our MPI community meeting. So that will be scheduled at 7:30 p.m. on Sunday. So let's catch up then for more details. So that's it for now. This is Srikanth Rajan signing off until we catch up on Sunday with the Market Pulse podcast. Goodbye and have a great weekend.